Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
I was muted, guys. Good morning. Sorry I'm a little bit late, but I wanted to make sure that I got a really good breakfast today because I'm taking that test and everything. So I'm probably going to be pretty hands off, but we do have a lot going on today. So it's probably like the worst day for me to have scheduled the test and take the day off, but it is what it is. I've, made the decision a long time ago. So let's see what we got going on here, because we did have some pretty big news with the Treasury refunding announcement. And I can see here, Lucas is saying that it was a quarterly refunding of 121 billion to raise new cash of 15.9 billion. The market did jump off of that initially, but it's kind of coming back. I'm wondering. So let's read Financial Juice in here. They've got all of the details. U.S. to sell 25 billion 30-year bonds on February 8th. Auction sizes will likely result in 350 billion net increase in privately held supply over the next 2 months. We expect conducting several small value buyback operations in April. Whoa, buyback operations in April. That is interesting. U.S. Treasury to increase April 5th 5-year TIPS new issue auction to 23 billion, up from 1 billion. So they are increasing the TIPS. Treasury to maintain February 30-year TIPS new issue auction size at 9 billion, increase March 10-year TIPS reopening to 16. Treasury expects to maintain bill auction sizes at current levels into late March due to fiscal forecasts. Treasury to sell 54 billion in 3-year notes, 42 billion in 10-year notes, 25 billion in 30-year bonds next week. It anticipates modestly reducing short-dated bill auction sizes going into tax filing season. Treasury boosts nominal auction sizes except for the 20-year. So it kind of sounds to me like there is more issuance in the longer maturities. I'm not 100% sure why the market likes this, other than that I guess it was less than anticipated. I don't know. Fed decision plus month end, if there's any day that can give you crap for not trading it. Yeah, it's totally true, dude. We had Treasury refunding announcement, Federal Reserve meeting, and a pretty significant Federal Reserve meeting too. End of month. It's just like I'm telling you guys, this is my theory. I'm trying to find a way to prove it. I don't know how to prove or find empirical evidence for this theory, but it seems like that there are certain times, certain days where it's like all of the timelines interconnect, It's just everything gets scheduled to that day. I chose the 31st as the day to do my swing because that was kind of like when I lost some of the materials. So when you buy the training materials from SEC USA, things like the note cards and the practice tests are you don't get forever. So after January was when the tests would expire for me. So that's why I scheduled it then. I was like, I got to take all the tests and just be ready before that. So that's why I scheduled it, but I didn't think about what was going on that day at all. So the Treasury doesn't anticipate making further increases in coming quarters based on current borrowing needs. That's, I think, the thing that is kind of boosting them. Maybe the buybacks too. I can see, though, a very clear steepening bias in this, right? I'm taking the Series 3 test. Taking the Series 3 test today. You had an emergency? Well, good morning, Jiwi. You weren't here. We were about to we're just talking about how we're going to punish you. So there's this thing where, like, I don't know if it's like flies in the air and like they land on the note cards and like poop on them or something. But like if I leave any paper out, I get these little like grease stains on them. Got some stuff there that I haven't really memorized very well. Probably should do better. Like, how do you create a synthetic short call? You short the future, and you short a put. How do you freaking remember that? There's got to be like maybe some mnemonic device I can come up with or something. Well, I'm not seeing a whole lot else about the Treasury refunding announcement. This afternoon. We're going to tell you the exact time. It's after the meeting, but I'm probably not going to stream and watch the meeting. I'll be like eating lunch and traveling. So this last night, you know, I wake up. I'm thinking, oh man, I don't really feel super rested. Kids haven't really been going to sleep, and it's probably almost time to wake up, but I need to go pee. So I go pee, come back, and my phone starts buzzing, and I look at it and it says, "Oh, you have a test at 2 a.m." Like, what? In the middle. So apparently, so I go back and I check the emails, and all the emails have it in the afternoon as correct. But for some reason, the meeting invite thing that they sent me for my Google Calendar says that it's in the middle of the night. Okay. Why did you decide to do these specific tests? Trying to get a job? No. I mean, that's the real issue, isn't it? Is that I have such a good job that it really doesn't make much sense to switch over. Like even if I switched over to like trading for a bank, I don't know if I would make more. I guess I would make more if I moved to New York, but I don't know if it would be like an increase in my standard of living, right? So I don't 100% know what I'm gonna do with it. I'm just kind of walking in the direction and hoping that as you get closer, you kind of know what you're gonna do, right? So the Series 65 allows you to be a investment advisor, and the Series 3, which I'm going to take now, allows you to be a commodities trading advisor or a commodities pool operator. So what we could do after this, I go to the SEC, I register and all of this sort of stuff, right? Not the SEC, the CFTC. Go to the CFTC, we register and everything. Got to come up with a name for it, right? And then you guys could all join my commodities trading pool, and I could trade the pool as a whole or something like that, right? That's the sort of thing that it would allow us to do. Or it would allow me to give advice on futures, right? Like if a farmer came to me and said, I'm concerned about the harvest being too good this year, and I want to hedge my prices, etc. How do I do that, right? I can give them advice, and I can even like set them up with a broker and do all of the work for them. You know, like the account would be in their name and everything, but I would be talking to the broker and telling them what to do and advising and all that sort of thing. Those are the sorts of things that you can do as a commodities trading advisor. Okay. Now, the other thing that I can do is I can go and I can take the series 31, I think it is, something like that. And then that would allow me to run managed futures. So then we basically run a hedge fund. We could basically run a momentum strategy fund that anybody could invest in. I want to be in that type of situation where I feel like changing to a coveted job wouldn't change my standard of living. Yeah, I know, right? Working in finance is hard. Well, it's one of the things you got to understand, though, is that there's a lot of different sections of finance, right? Like what most people do in finance, which is like working in the back office, effing sucks. I don't understand why anybody does it. To be honest with you, I don't understand why anybody does it. But, and that's very different from working on the trading floor. And that's very different from working in investment banking. Investment banking is murder, right? And then that's very different from working in the tech. But I was kind of on my mind this morning because there was somebody on Reddit was having an argument with me. It's kind of funny because I don't think that people on Reddit realize that, like, once you're 3 conversations deep and it's been more than a day, nobody else is reading it, right? So I'm the only person probably reading this guy's comments, right? And basically it was about technical analysis, and I was like, well, what makes you think that this guy or that guy is using technical analysis? And they said, well, Jim Simmons, he talks about using moving average. So does that mean that he uses technical analysis? Well, this is kind of like he's not looking at a chart and saying, I want to buy this asset because I think it's going to go up based on the chart or something else like that. No, what they're doing is they're using very sophisticated computer models to generate a highly uncorrelated matrix of assets and then entering in on those assets long or short based on momentum signals. And one component of the momentum signal would be a moving average, or like a 50-day high, 50-day low sort of a situation, right? But like the real edge is how you construct the portfolio. Oh, and by the way, it's not a day trading strategy. The way that this makes money is sitting in positions for months, right? It can when it doesn't work, you get out very quickly. But when it does work, you can stay in it for months and months and months and make tons and tons of money from it, right? That's how a momentum strategy works. So it's like, it's not like the rest of the technical analysis world, okay? So it's not really relevant to what these chartist people tell you. Like it doesn't lend any credibility to anything other than momentum. Doesn't lead any credibility to anything else in technical analysis. And so this guy says, well, I know that technical analysis works because I've made money from it. Right? Okay, well, so how long have you been doing it for? And he's only been doing it for a year, right? So like, that's not an argument, really. So you don't have enough data to really prove that it's consistent or that there's a real edge in there. And he's not willing to show us the results. So there's no argument, right? Like if there's no empirical and evidence involved, then you're not really having a discussion. You're just noise, right? Because how else is anybody on the internet supposed to know that the thing that you're saying is worthwhile or not? You can't unless they present empirical evidence. It's impossible to know. All you can do is just read it and trust, have faith in your heart of hearts that it works. But that's not going to change how the strategy goes for you, right? How are you going to know? It's just noise unless you have empirical evidence. So like, if you're not willing to show your results, Like if you're making an argument from the basis of, well, I'm a profitable trader, so what I say must be true, but you're not willing to prove that you're a profitable trader, why are you posting? Stop posting. You're noise. Nobody on the internet is, anybody that believes you is stupid. You could be right, but anybody that believes you is stupid because you're not presenting empirical evidence, right? And so this guy started trying to pull like the narcissist tactics, right? They're like, well, you're no different. You're making the same claim, yada, yada, yada. Well, no, I'm not. I don't make any performance claim. I can show you how I've been doing. It hasn't been very good the past 3 months. But I'm not making a performance claim. I'm making a claim based on empirical evidence. It's a completely different thing, right? And that whole topic kind of, because I see what it seems to me was happening is like, I've just gotten a little bit too good at picking out the narcissists and like really getting under their skin. Because like they keep posting, right? Like they can't help themselves. They want to keep posting and arguing about it, even though they have like no clue where I'm coming from. They clearly don't understand this idea that like, here's an argument based on empirical evidence. Here's what you're doing, and what you're doing is noise. It's not an argument, essentially, right? Well, why do they get like that? Yeah, a lot of people get God complex. They've done it, listen to them, believe and love them, and they are gods, and you cannot question them because they feel higher, quote unquote. Yeah. Because here's what happens, okay? You've had struggles in your life. You feel that, you weren't given a chance when you should have. You were overlooked in a particular situation. You were let go from a job that you didn't think was justified, whatever the deal is, right? And you get this chip on your shoulder. And, I am not valued by society the way that I think I should be. And so I'm going to go out and prove to society that I am valuable. And so then, because you're down in the dumps and you don't have a whole lot of options, you decide to go into day trading, right? And if I can make it in day trading, then I can prove my value to the world. And so if you've had a little bit of profitability, let's say that they've been profitable for a year, at that point, they have basically concentrated like all of their self-worth behind their trading. So if you come in and you say, well, those results are random, right? It essentially is an attack on their very being, right? Because they have invested their entire ego into the idea that they are worth something because they're a profitable trader, right? I don't have that problem because I've been successful on my own in numerous other ways, right? So to me, my value as a person is completely disconnected. It has absolutely nothing to do with how well I'm doing as a trader. I've been through all of those battles and overcome those things, okay? I've lost jobs before and I came back and I got a better job. I got divorced before I came back. I got a better marriage, a better life. All of the things and all of the goals and things that I wanted to accomplish, I went and I did them. And so much so that I have to come in and like find new goals, right? So I don't care about that stuff, right? My value is not based on my trading. And I've also learned that my value to you guys is not based on how good my trading is. My value to you guys is based on the quality of the empirical evidence that I'm able to show you, right? So because I'm able to live from this place of, great security, and I got to tell you, a big part of it is having like a very secure relationship with a wife that doesn't have any of these weird attachment issues that everybody seems to have these days. right? Then you just don't fall into those things. I tell you what, like if you're a narcissist, man, don't trade. I mean, narcissists can be attracted to trading and they can do pretty good at trading in the short term, but it destroys you, man. It just chews them up. How old are you? I'm 38 this year, right? 39 this year, actually. Did accounting, finance, and controlling for 5 years. Does it suck? Yes. Is it hard? No. Oh, not necessarily hard. That's probably true. I heard rewarding career comes with difficulties and challenges. I don't know if that's necessarily true. I think the thing that's really wild about the job market, especially in the United States, is that you can go from like, you know, absolute dumps to just absolutely killing it just like that. Why do people think being able to live off trading brings prestige? Not sure where they get this idea. Outsiders basically thinking you are gambling and kind of, yeah. Well, I think it's because we were sold a picture in the 80s. Like honestly, that's what happened. It started in the 70s, but these guys that made the big money, right? A lot of them started in the 70s and 80s and then into the 90s, and that's kind of how they made their fortune. I'm sure that we will have other new groups of people who don't know who they are, but you know, there's going to be some guy come along that's in their 40s that also becomes rich off of, you know, running a fund or something like that. Maybe it'll be me. I kind of want to go in the direction of a fund, but we'll see like how the research goes and all of that sort of stuff and what kind of opportunities make themselves available to us. I'm kind of bullish on the commodities sector, so I think that doing CTA and momentum strategies could be a lucrative thing. But you know, we were sold this idea, and then in the 80s it became a really big deal because essentially what they conclusion that they came to in the 80s was that the government had restrained the free market too much, and once we unleashed the free market by changing the tax code and so forth, we started to have just absolutely insane economic growth and success, right? And part of the illusion that was sold to us, though, at that time was that the market is perfectly efficient and that if you've made money in trading, that you're somehow smarter and better than everybody else because of that. But what we understand now is that the market is not very efficient, and that many of the people that have success, particularly from day trading, I would say most of the people that have success from day trading are really just lucky. And then the 2000s came along and the robots came along. And so the entire area of the industry where that people were doing floor trading, right? First it moved to electronic, and then the robots took over the electronic world. So there was a period where there was these guys, you know, in the early 2000s, they were just having crazy success from electronic trading. But as soon as the robots came along, those guys stopped making money. Basically by 2008, that era was over. And so now what's happening is my generation, the millennials, are trying to chase that dream that they were sold when they were watching TV when they were 5 years old. And this whole cultural zeitgeist that has kind of formed around it, not realizing that the entire world is changed, that the entire trading world is changed, and it's not the same game anymore. Well, he's the only one. Well, listen, I do show you guys my results from time to time, right? But I'm not making any performance claims. I'm not coming in here and saying, listen to me because I'm making money. I have not made money over the last 3 months. I had like, I would say a year or so where I did really, really well, 9 months to a year. And then it's just like been dismal since October. So the kind of one of the things that I'm coming to is that like my idea of day trading is like, why day trade? Because the longer that you're in the market, the more money you're going to make. So if your end goal is maximum capital appreciation, day trading is not the way to do it. You're only going to get maximum capital appreciation from day trading by doing options and catching luck, right? Getting lucky with options. If you want maximum capital appreciation, though, you're probably better just like sticking your money in an index fund, right? But so then why day trade? Well, because you can get potentially more consistent returns, or at least that's the idea. So I should be able to make enough money if I have a large enough capital base. I should be able to make enough money to pay the bills every month, essentially. And that's what it's supposed to come down to in day trading. Okay, so then we talk about what works in day trading. Well, nothing. I have yet to see like an empirically proven or even somebody with like 5 years of history from day trading that was actually profitable and had the kind of performance that people are looking for, where you could pay the bills every month. I haven't seen it. But one thing that we do know is that there is more, that the market is more statistically efficient than it is informationally efficient. That informational inefficiency is basically the quintessential state of the market, that the market is always in some form of informational inefficiency that you could potentially take advantage of, right? So informed trading it would be, and if is probably the most sensible place to try and find edge if you're day trading. But I think what I'm finding is that strategy has its drawdowns the same as any other kind of, normal strategy, and that you're going to have drawdowns of several weeks or several months with informed trading. You're not going to make money every month with it. So if you're not going to make money every month with it, then why day trade? Get what I'm saying? So then it's kind of like, well, if I do it could still want to do informed trading, but maybe I swing trade them, right? Maybe I do informed trading on stocks. I want to put more of my capital towards those things that are showing some promise, right? There were periods in its well, are you saying to my claim that if you want maximum capital appreciation, your best bet is to probably just put your money in an index fund? Well, I only say that because the other kind of opportunities that you have that would maybe be a better risk reward and everything are like, you have to have a ton of money to participate in, right? Somebody must be taking all of the money off the many losers. Where do you think all that money goes? It goes to the market makers and the informed traders. Yeah. The robots, the high frequency trading guys is one, and then people that know something that the rest of us don't. I tell you what, we got a Federal Reserve meeting today. I've so often seen the market move in ways going into a Federal Reserve meeting that really makes me think that like people are leaking stuff about the meeting and how it's going to go and what to do, because the market just moves in prescient ways on FOMC day, right? But the situation that we're in with interest rates is just really unbelievable to me. That Jerome Powell didn't push back more hawkishly against many of the questions that he got last time around. If we get the same thing this time around, where everybody in the media is like, well, yeah, but like look at how much financial conditions have eased and yada yada yada, and Powell is just like, nah, whatever, doesn't matter, right? At that point, I say the fix is in. right? I say the fix is in. We want, or not we, but the policymakers would rather have Biden win the election, and they're trying to keep things as easy for him as possible. And at that point, I say you just go long the most degenerate things that you possibly can and hope that it doesn't blow up before election day. But that would be, there are some people that maybe they already know that and they've already discussed the fix or whatever it is. And they know that you can go long, and that's where the money goes. That's where the money goes. And if you're not the informed, because can you really be the market maker? I don't think you can in the treasury market. Okay. Maybe there's some market out there that you can market make, but the treasury market, you're not going to be the market maker. So your only choice is to be the informed trader. So if you don't know something, there's no point in trading. I don't know if there's really a point in me trading this morning. Maybe after the Federal Reserve meeting, maybe there's something I can kind of glean in there that I'm like, oh, you know what? Like as soon as people realize this, and they're about to realize it really quickly, they're going to do this, and then I can front run that, right? But otherwise. Wall Street Journal reports Walmart in a reversal says they will open new stores in the U.S. Okay. You don't have to beat it, just collab with him? What do you mean? No, I feel like I'm lost. Oh, Joe Biden is going to be visiting Palestine, Ohio today. After a year. Wow, that is pretty wild, actually. Let's see here. I just come over here to Forex Factory real quick. Oh, they want me to turn off my ad blocker. I'll move shields down for this website. Sure. Oh, we have Chicago PMI in 45 minutes. I thought so. I thought that there was something else today. Chicago PMI. Remember, Chicago PMI comes out at 7, well, my time, 7:42, 3 minutes early to subscribers. So that's a piece of information that a lot of retail traders forget about, etc. that can help you out. So we'll see a move because it's always every time you'll see a move at 9:42 Eastern time, and everybody's like, "What was that? Why haven't I even get it?" I should put that in main chat. It's 3 minutes, not 2 minutes, right? How do you stop trading on evaluation accounts? So the solution to over trading, well, okay, I can kind of take this two directions. So I think I'm going to start with the other direction. So the other direction is you have to realize that trading gives you a high, right? You come in and you make a trade and you're successful with it. It feels good. It gives you certain chemicals. It creates, especially as you're anticipating, it working for you. You're getting like tons of dopamine from that, and your body just absolutely craves it, right? So you kind of have to be able to get yourself into like a clean state where, you know, that dopamine isn't messing with you, basically, right? And when you start losing, what happens is you're chasing it. You want it. So it's a great idea if you have a losing trade to wait 45 minutes. Because this is usually how long a liquidity hole lasts. So 45 minutes and then you're in a different market situation. Maybe you can try taking another trade, right? But I think that the ultimate way to stop over trading here is to realize that you only have an edge if you are informed. So if you don't have a piece of information that you know that you don't think the rest of the market knows, and you know that because of a certain situation that in the next 5 minutes the rest of the market is going to start placing orders because of that piece of information, right? If you don't have a situation like that, then there's no reason to trade. And once you realize that you need to be informed and how difficult it actually is to actually truly be informed, you will take less trades. And over time, you will just take less trades. Let's see here. As now, markets are not 100% efficient, but they are pretty much efficient most of the time. I believe your best bet at day trading is helping the market to stay efficient. Well, but so the market does not recapture like efficiency based on the fundamentals until you come out to a 3-year time span. So Dum says we're just a bunch of fiends, eh? Who called you fiends? What? I'm a little bit lost by some of your guys' comments right now. I feel like we're on... Yeah, that's what was that, about a 3-year time span? The informational efficiency of markets is not recaptured until you get to a 3 to 5 year time span. Meaning that the market can have some fundamental misunderstanding about something. The market can be just completely mispriced based on the current information, and that mispricing can persist up to 3 to 5 years. Oh, we're just a bunch of addicts. Yeah, I got you. They're not micro inefficiencies. Well, so define a micro inefficiency. From what I'm saying is, the market is very statistically efficient, but not informationally efficient, right? So statistically efficient, meaning that any kind of statistical analysis that I can do on the market will basically come out to close to random. That it will look like a random walk. Okay. Now we do have some empirical properties that are different from random, but you know, like they're competitive. Like the market takes them out very quickly. The market is very statistically efficient, but it's not very informationally efficient. It's not very informationally efficient. Like there's no way that you can cut rates 6 times when financial conditions are already this easy. The current pricing of the treasuries, I don't think accounts for that. And it's been like that for weeks, right? That's an informational inefficiency. We might have an opportunity here to take advantage of it, right? We know that there is a informational inefficiency here in the market in terms of their expectation of future rate cuts. And Jerome Powell comes in here today and says something that forces the market to face that reality. Then we want to go short treasuries, and that will run and run and run and run. That's an informational inefficiency that you can take advantage of. But like a statistical inefficiency would be like when you get this chart pattern, it tends to resolve in this direction. That on a risk-adjusted basis, there isn't any edge in those because the market just takes them out way too easily. Right? And why is this? It's because the impact that orders have. So the impact that orders have is such that, you know, even the noise even all of these noise retail traders, they might find an inefficiency like that and trade it, and they remove it from the market really, really quickly, because your impact is so high that even a decent size of retail traders can make a statistical inefficiency go away. But if a big guy comes in, his impact has so much impact that it just completely washes out any kind of like actual valuation that you could have. You could come in and say, the price should be this, and if it goes above this, I'm going to sell it. Well, yeah, but there's this index fund that's going to buy no matter what. And you're just going to get run over. And so this is why you have a market that is statistically efficient and informationally inefficient, right? That's what I'm saying. Let's see here. In my opinion, overtrading is caused by bad strategy and or psychological state of a trader. Bad strat equals too many false signal. Bad trader equals takes trades outside of the strat. Yeah. But I like, one of the things that I find though is that a technical analysis trader like almost always goes off plan. And I'm not convinced that it's just that like, well, we don't have the willpower to stick to the strategy or any of that sort of stuff. I think that it's kind of built into the strategy that if what it's actually doing is random, it's going to drive you insane. It'll drive anybody insane. We were talking about Jesse Livermore yesterday, right? Perfect example. Here's a guy that literally made like what would today be billions of dollars. Like, one of the things that he did was he got a huge short position set up, and then like the crisis of 1907 happened, and he just totally cleaned up, right? And then that was like billions of dollars that he made in today's dollars, and he lost it all. And he said, "Oh, I went off plan. I made mistakes, etc., etc., etc." Right? Which broker? I use EdgeClear. That's nothing more than an example of a person who had mental problems and went into trading. I don't know if that's true though, man. How do you know that the trading didn't give him the mental problems? Just saying. Like, show me the example of a technical analysis day trader that died with all of the money that he made and was happy and didn't have any problems. I don't think it exists. So if all retail TA traders that do this have issues, what do you think is more likely? That this attracts people with mental problems, or that it gives people mental problems? And I'm making an argument that isn't really an empirically based argument, but how does risk management work? Okay, so I'm probably going to take this in a different direction from what you're looking for, okay? But one of the things is that there's a strategy called momentum. Okay, momentum is you have a portfolio or a universe of highly uncorrelated instruments, and then you enter long or short on those instruments based on momentum signals, which are usually like some combination of a new 50-day high and moving average crossovers, or things like that. Okay, or the structure of the basis, or the structure of the calendar spreads that you have. what interest rates are. There's a bunch of different things that you can kind of factor into like your momentum signal, but you know, then you go long and you're short based off that. And this is a profitable strategy, okay? And it's not just a profitable strategy, it's a famous strategy, because there are many famous people that have gotten a lot of attention in the trading space that were essentially trading momentum, okay? The turtle traders, you've probably all heard about the turtle traders, right? The turtle trader strategy was momentum. That was basically, they invented the momentum strategy as far as I understand it, okay? And so there's all of these books, like the Jack Swagger books and all of that sort of stuff about technical analysis and everything, that what they're actually describing is momentum strategies. And what happens is we take everything that we're learning about the momentum strategies and then misapply them to the trading that we're trying to do, which is intraday trading. It wasn't an intraday strategy, okay? So when you get into an intraday strategy where you have a portfolio of multiple assets and all of this sort of stuff, risk management becomes a complicated thing, right? And so they have all of these things where they calculate how much value at risk they have, what the volatility of the underlying instruments are, what the correlations between these instruments are, and so forth, so that they can adjust the size of their positions relative to the market positions to avoid a huge loss. Okay, and so there is a lot of analysis that you can do, especially once you start getting into these correlation matrices and everything, to try and manage risk. And the way that you manage risk is a major part of why the momentum strategy works. Because once you do all of that, you get a really good Sharpe ratio from it. And that's why it's a valuable, famous strategy, okay? Managing risk from a day trading perspective ends up being a completely different sort of a thing, right? And it's a tough nut to crack. And I don't know if I have super great answers, right? You can come in, and what most traders will do is they'll have set stops and targets. They'll say, I'm not willing to lose more than X amount on a trade, and I want to make X amount. And based on the profit and target that you have, you're going to get a certain win rate. And everything that I found from my own back testing is that the stop and target that you have is the most dominant factor in the results of your strategy. It is the most dominant factor, and it tends to revert towards break even. Basically, if you say R, use yellow. If you say that R factor is equal to your average winner over your average loss, right? Then your win rate will tend to be equal to 1 over 1 plus R. Okay. So if your win rate is 1-to-1, right? So your winners are as big as your losers, then that's 1 over 1 plus 1, which equals 1/2, which equals 50%, right? So if you have equal risk reward, then your strategy will tend to get a 50% win rate, right? Okay. If you come in and you say, my average winner is going to be half as big as my average loser, then that's 1 over 1.5, which is the same as 1 over 3 over 2, which is the same as 2 over 3, 2 over 3, 67%. Your win rate will tend to be 67%. If you go to 1/4, then it comes out to like 80. Okay. You can graph that, by the way. It looks something like this. It's a parabola like this. Oh, actually, I think it's the other way, huh? This is like, there's a 0 and there's like this. and it goes like this. Okay, so like here's like profitable strategies, right? And then you can kind of map out inside of them. These are different types of strategies that have these kinds of this way out here. These are black swan strategies, and these over here, these are kind of more HFT strategies, and yada yada yada. Well, okay, isn't that assuming a random walk? So if you assume that the strategy is break even, then that's what you would get. But what I'm saying is that when you use set stops and targets, your results will tend to converge on break even over the size of the data set. It might be a little bit above, that and be profitable, but it's going to mean revert towards that. And if you want results that are significantly different from what would be like randomness, then having set stops and targets doesn't really work. So basically what I'm saying is that there is kind of a reason, I guess you could say, to not use set stops and targets. That to come in and do something where your stops and targets are a little bit more flexible and based on rules so that you can get an actual distribution like this. And now you kind of have the power to get something where, hopefully you can cut off these and make sure that those left tails don't happen, and, get something that will give you far right tails and lead to profitability in the long run, right? But to do that, you kind of have to get away from the set stop and target. Then using time stops would be more capture the underlying distribution of what is actually happening with that, I think would be great. So if I am doing a study and I'm trying to prove how effective a particular signal is, having a timed exit would probably make more sense, would give you more information about what the market actually does. Yes. I don't know if it would necessarily make you more profitable, but it would tell you more about the market. In my own backtesting, though, what I find tends to work the best is all in, all out, which is you get a signal, you get in, and you stay in until you get an exit signal. That tends to be more profitable. So for instance, if you do a moving average strategy and you just say when price goes above the moving average, buy, and when price gets out of the, goes below the moving average, then sell. If you do that, especially if you do that on a day time frame, usually it actually does end up being profitable. The drawdowns are atrocious. Like, you would never be able to trade that strategy. But if you had an infinite amount of money, it would be profitable. But what is that actually saying? What that's actually saying is that taking on risk is an important part of making money from day trading, essentially. And the issue that you have is that taking on risk is so dominant in your returns that if you just come in, these guys that are making money, especially the ones where they're making money and it gains notoriety, it gains your attention, right? Basically, the way that you do that is doing stupid stuff, taking big risks, and that contributes more to your results than like actual strategies do, right? And that's a big problem, because if all you're doing is taking on risk, that makes money in the short term, but eventually that far left tail comes and wipes you out. And if you have a way of dealing with that far left tail and avoiding the far left tail, then you're golden. But, especially if it's all technical, you probably don't. Right. Maybe a trailing stop that activates after X bars if you are in the negative and start immediately when you are in the profits. Oh, that's actually an interesting idea that I've never tried, smart data. So you're saying, if I am underwater, like let's not just say like that I'm losing, but that I am past like my stop. Like I don't want to lose more than 8 ticks in ZN. Let's say that, 8 ticks is a fairly generous range that, like, if you've lost more than 8 ticks, it's probably going against you. But we could say, okay, if you've lost 8 ticks, then I stay in for 5 bars. And if all 5 of those bars are below 8 ticks, then I exit. That is an interesting idea, although I can already see that the really big issue with that one is that if you've caught the wrong end of a really bad trend, it can move awfully quickly in 5 minutes, right? I'm not sure why I don't listen to you every day. You're always talking about something interesting. Oh, thank you. I don't think that I talk about something interesting every day, though. Is Taylor Swift? Okay, asymmetric strategies, I think can be deceptive and problematic. Yes, because the real truth of it is that almost any strategy on any asset will probably do better when it's buying the asset than when it's shorting the asset. Like the way that markets tend to work is most of the time they move up, and when they do move down, they'll move very, very quickly, right? So, for instance, Jesse Livermore, where he made his big profits was when he was short the market at the right time, right? And then he made like a ton of money, but then he would lose it over time, right? So when you're doing asymmetric kind of strategies, you are basically, there's 2 issues with it. One is that you're more likely to be curve fitting and falling into selection bias, essentially. Okay. So, if I have something and I can test it over a bunch of different data sets, different times, different time frames, different assets, and it still works, then there probably is really something to that strategy, I think, right? But when you start doing things like, well, it only works when you're going long, and it only works on this instrument, and it only works on this year, then all of a sudden you're like, well, yeah, okay, so maybe it was just random chance that it worked, right? You're curve fitting when you do that. I think the other issue, though, is that when you only take longs, for instance, you start to get rid of some of the more valuable properties of a strategy like that. Like for a momentum strategy, one of the things that makes the momentum strategy so valuable is that it has a tendency to outperform in years when the stock market is down. So normally you don't make even more money from a momentum strategy than you do from being long the S&P 500, except for when the S&P 500 is going down, it outperforms. And so then over the long term, that's why it outperforms, some of these strategies do outperform the market, right? In order to have that property, you have to be going for shorts too, right? So when you do that kind of stuff, you're kind of giving up some of the most valuable aspects of those strategies. You should have been here yesterday. You talked about buying a house and Taylor Swift moving next door. Yeah. Someday. I'm hoping that if we get a house on the billionaire private ski resort, that somebody like Jim Cramer or somebody like that moves next door to me instead. But you'll see what happens, you know. Stress being an inherent part of the activity, like trading or, say, a soldier in combat. Well, I kind of think that if you have a mechanical strategy, and it is very well proven, that takes a lot of the stress of it out of it, right? Like, I am way more calm when I think I'm informed. And you can see these situations where I've had trades go quite a bit against me and still be okay. Now, when I'm losing over and over again, then I get really stressed out, right? But that's because I know that my edge is based on whether or not I'm informed, and me losing over and over is a sign that I'm not actually informed like I think I am. Well, they breached those highs and they're going up, and it really does seem like, you know, we never went over the charts. Should we do that? Because I think there are some important things to point out here. So here's the Treasury. Yesterday, we had the sorry, what was it that we had yesterday? Oh, jolts. We had jolts. And the market sold off of that. But then, and I kind of said, you know, I think that there's a chance because of the Treasury refunding announcement that if they sell, that it will be like a kind of a temporary thing, and then you'd be able to buy it. And it turns out that I was right and just wasn't patient enough on it, that it wasn't until several hours later, but they did buy it back up. So I think that the Treasury refunding announcement, which happened over here, is having a long-term impact on the markets, in the Treasury markets. And when we come over to like a daily basis, you're starting to get some uptrend. Now, we've got a Federal Reserve meeting today, so who knows how this actually comes up. But like, if we end the day up, that may give them license to continue this uptrend. You might start to see people pile back into it and push it up as an uptrend. So that's important to keep an eye on. S&P 500 is still down from yesterday. There was a bit of a move overnight, I guess, because the earnings, the market did not react very positively to earnings. And right now, everybody is kind of saying maybe all of the good news that might come from earnings is already priced in, and this ends up being a sell the news sort of a thing, right? Okay. Oil still middling. I haven't heard any new headlines over there, except for that we are supposed to hear have some strikes against Iranian assets that were attacking Americans. Those assets are like, oh, we're sorry, please don't kill us, but we'll see what happens. Gold and silver are outperforming here now. So that's very interesting that the treasuries aren't, well, I guess the treasuries are moving up too, huh? But it seems like gold is a place to be because people are kind of like thinking that there's going to be currency debasement here, right? Copper is moving up. So maybe things are going a little better in China. That's a bullish sign. And then we get the dollar. And the dollar is just getting killed here today. We are below 103. And I bet that means you probably see a little bit of upside in Bitcoin too, yeah? Well, no, not today. Not today, but they are, you know, back above 40,000, actually above 43,000. So that's good. Wow. So, you know, I did that just as they were kind of busting out. That really ran, didn't it? That really ran. What to make of that? They must be buying because, you know, the kind of buying that you get right after the S&P 500 open. Because that was like a wild move. It would be awfully funny if Powell ends up being hawkish today and just absolutely destroys this, but I'm kind of starting to feel like the fix is in. You know what I mean? The fix is in. I don't know. I think going back to the stress thing that you guys are talking about, if your strategy is mechanical, then stress shouldn't be such a big deal, right? Just follow the strategy. When your strategy is I'm informed, well, now you kind of have an issue, because the more stressed you are, that will affect the quality of your analysis, right? So you have to manage that. Wow, Ripple was hacked for 213 million. Wow. And somebody's already laundering the money out of the market too. That's insane. That is a big amount. Wow, Loon tells Brits there is a moral issue with having children. That is pretty crazy. I'm reading Zero Hedge now. Trump versus Biden polls odds and asset allocation implications. We'll read that in a second, but I want to see what they said about the Treasury increases coupon auction sizes again. As highlighted in our preview, and as the Treasury itself noted in its last refunding announcement moments ago, the Treasury quarterly refunding announcement confirmed that it is indeed boosting the size of its quarterly issuance of long-term debt for a third straight time, rising to $121 billion, just as consensus expected, and said that it does not anticipate needing to make any further increases in nominal coupon or FRN auction sizes beyond those being announced today for at least the next several quarters. Are we getting steepening on this move, by the way? Yes, we are, which kind of works against us. The Treasury Department will sell $121 billion of bonds at its quarterly refunding auctions next week, which span 3-, 10-, and 30-year treasuries, which is in line with what most analysts expected and echoed the cadence of increases unveiled at the last refunding in November. I'm not going to read all the details about those things because that's just numbers and it probably goes in one year and out the other. Based on current projected borrowing needs, Treasury does not anticipate needing to make any further increases in nominal coupon or floating rate note auction sizes beyond those being announced today for at least the next several quarters. Zero Hedge says, of course, with the Biden fiscal stimulus fire hose on full blast ahead of the November elections, we expect this number to be revised materially higher in one quarter. Relief from further boosts to auction sizes for longer-term securities may help support demand for treasuries. Investors for several months now have been particularly sensitive to news on the overall supply of federal debt at a time when the Federal Reserve has been steadily shrinking its own holding of securities. Probably, you know, we could have just gone long from this whole thing based on that, but did I miss a piece of news, man? Because I don't know. When did this kind of start? It was started at like 30 minutes ago. I feel like that I missed. Oh, that's interesting. My news squawk is just talking about bets for ECB rate cuts. So is the market moving that way because of ECB? Something that will be interesting here, I guess, is if the equities continue to sell and the treasuries continue to buy, because perhaps this is a risk-off move that's coming through. Traders add to ECB rate cut bets, see 150 basis points by the end of 2024. Okay. ICT already dropped out of the Robbins Cup? Really? Oh, yeah, that's right. Yeah, you didn't even do it. I don't get why everybody is... Yeah. Well, I don't find contests that interesting. Like, somebody winning the Robbins Cup doesn't mean a thing to me. Because the best way to win a contest like that is to do something degenerate, right? especially if it's only a year. If it was a 5-year contest, that'd be a different thing. What's a Robbins Cup? It's a contest where you have to fund yourself with your own live account, and then all your trades get verified by them. And, you know, I don't know if there's a prize, but like if you're a momentum fund, it's like a good idea to participate in the cup. You ever looked into the reliability of COT data for longer swing trades? No, that's on my list. So I've looked a lot at COT data. Generally speaking, that and open interest and everything, you should probably know what it's going to come out to, generally speaking, by the time it comes out, because it's like a week delayed, right? But for like a daily, weekly strategy, maybe there's some value to it. Maybe you could incorporate it into your model and see how it works. Yeah. There's a lot of I just don't have the freaking attention span, man. There is enough things to look into that we could definitely support. Okay, so here's 742. So was that the Chicago PMI? I'm not actually seeing a move here, though. That's weird. I'm guessing that the Chicago PMI must have been a nothing burger, but geez. Ripple founder confirms unauthorized access of personal XRP accounts, but not Ripple's. The affected addresses have been frozen and law enforcement is involved. Hauser. Joseph Wang note that the federal deficit projections we see from the official sector are likely much too low because their interest rate assumptions are much lower than market pricing. This underestimates interest expense. This move is extremely interesting to me because the only thing I can think of that would be pushing it would be the Treasury refunding announcement. I don't know if there was actually that much information in it, but that is absolutely the sort of thing that could create a really strong trend like this. But the thing that's so weird about it is that it really didn't get going until like 30 minutes after that happened. So is that really why they're moving? I don't know, man. It's a little weird, don't you think? And then, yeah, it's kind of looking like Chicago PMI must probably be a nothing burger. Okay, well, shall we read about Trump versus Biden polls odds and asset allocation implications? The former president leads Biden by 3.9% based on Real Clear Politics average poll data on who will win the general election. So this is the general election poll, which is kind of useless in this situation, I think, but okay. Trump leads Biden by 11 points among online betting firms. I don't think that that's true if you go to predict it. Looks like the treasuries did have a pullback there. Yep, on Predicted, they have him up 47.45. But Zero Hedge doesn't like that, so they just throw that one out and ignore it. Trump leads Biden by 2 points in favorability polls. Trump leads Biden in terms of approval at this point in their terms. In fact, Biden has the second worst approval rate of any president since World War II at the 1,115th day of their presidency. Truman was the worst. Oh, really? But as we detailed previously, Biden somehow leads Trump by 2 points on Predicted. Oh, okay, so they are going to point that one out. Okay, so assuming Predicted is not the sole arbiter of knowledge, it appears President Trump is the favorite at this stage of the campaign. I think that that's incorrect. One way or another, the election result has the potential to be a significant market-moving event. Okay, so let's analyze this, okay? Because I know more about this than Zero Hedge does. I feel pretty good about it. See, look, we have an informational inefficiency. So let me tell you, what do we know? Well, you guys were here when we found this out, right? The last poll from Pennsylvania showed Biden pretty comfortably above Donald Trump. And this is a polling outfit that's been pretty reliable. So if Donald Trump loses Pennsylvania, his path to the presidency gets really, really difficult. So everything that you're seeing about like the general election and so forth is completely irrelevant. We need to look at state polling. Now, granted, I don't know if any of the state polling is really going to be super accurate at this point, but at the moment, it's not looking too good for Donald Trump. So that's why Predicted kind of has shifted in the odds recently. What do Treasury traders know about the Fed that we don't? I don't know. I think it's just that the Treasury refunding announcement means more than we realize, and it just took them a long time for it to get going. It's either that or there is some sort of crazy risk headline that we haven't heard about yet, right? Like they're buying up because there was like airstrikes somewhere, or because another firm in China went down, or, you know. The last time, so I'm having flashbacks to Silicon Valley Bank, right? Because when Silicon Valley Bank happened, we saw these massive buying sprees that made no sense to us. And it was because we were not in the know about what was going on with those banks. So that's a possibility, I suppose. Oh, by the way, Chicago PMI was 46 versus a forecast 48. Just go long here? Well, I mean, because of my situation and everything, I'm not going to take it. I wasn't planning on taking a trade today. Didn't want the stress of taking, especially not a live trade, before my test. So, it was really dumb to do that, but... Plus, my plan has been to save my capital until after all of the big, because I still think, like, I mean, of course this is a big move, don't get me wrong, we could have made money off of it, so it is a little disappointing that I missed it, but Powell could completely reverse this, non-farms could completely reverse this, like there could still be lots of twists and turns this week, right? And there could still be trends coming off of that too. So I don't think that I necessarily have to blow my wad all over this one move. Especially if I don't really know why they're moving, right? If I'm not informed, then it's probably better for me to not take a trade. This is kind of a weird situation where, like, we were informed and didn't realize it, possibly. Yeah, the delta is definitely going up. Like, this move, starting from 7 o'clock, has been like almost 40,000 contracts. So there is a huge meta order of some sort coming through. What is that in nominal terms? 4 billion. I think at 4 billion that if it was like one guy, it's going to be like sovereign wealth funds and stuff like that, right? But it's entirely possible that they waited for the refunding announcement, and then after that, China and Belgium and France and all these guys said, okay, so we need to buy X amount now. And they waited 30 minutes and then started exit. That could be what's going on. I'd say that's probably the most likely situation, at least. Now what else? Oh, the dollar is just getting creamed here. So the dollar had been falling the whole time, and then that's interesting. Interestingly enough, the biggest winner today is natural gas at 1%, which is actually kind of small for natural gas, followed by ZB, UB, and then gold. Gold 0.76%. I would expect gold to be doing way better than that based on how bad the dollar is getting hammered. Well, there was just one of those that's not supposed to happen things right there. That's gonna, I should have just clicked right there, but sometimes when that happens in a trend, that's probably not good for. In fact, even right there, I probably could have gotten a tick. Yeah. That is wild, man. That was way wild. Wow, you're seeing very extreme changes in the level 2 as well. So this is turning into a bonkers trend. No fill at 13.5, so it's kind of hard to get fills on the bid too. Me getting involved here though does kind of make it look like it's gonna stop a little bit, doesn't it? If this trend continues much more though, so we're like to 50,000 net, right? So if it keeps going, jeez, this is like a bonkers trend, dude. Yeah, I'm not going to take a live trade today, at least. There's a big order there in the 5-year. I need to come in here and adjust some settings. Market depth here should be like 32. Not nothing big above us in the 30, but it is the front end that's driving us, right? So. I'm probably, I think that this will probably work out and everything, but I feel like I'm developing a bad habit by like not doing anything until it like really is like screaming that something's going on, right? Okay. Yeah, there's the pullback. Spoo's still selling. It seems that we're getting... What? Oh, thank you. That it turned down. Yeah. Well, I kind of even said like it looks like as I'm getting in here that like the activity is spurting out. Then I'm gonna get stuck. Yeah. Well, I know that if it's already very clearly trending and I'm getting in, that it's probably not, I really want to get in when it's quiet and it's not doing anything. I would have wanted to have been in at like 112 even or something. It would have been an amazing trade if I did. Yeah, it's not necessarily me. It's everybody getting involved in that one spot and the damage that it does to liquidity that makes it happen. So what's this? The People's Pundit Bloomberg's headline for their own poll is about the highly biased tainting conviction question rather than the result showing Biden losing every single swing state. North Carolina increasingly doesn't look at all competitive with Trump as the nominee. Huh. Okay, that wasn't too bad. Yeah, $1 trillion and but you know that you guys you have a propensity. What do we say? You're likely to get in the same place that everybody else is likely to get in, right? So it's not you, it's that just based on like the way that it works, you're likely to get into the wrong spot. So you kind of have to actively avoid that. That's why I think the delta at price info does. Are you talking about like you have the volume profile thing and it shows you the delta? Maybe. Well, one thing I would say was that when we broke those highs, like 03 half, right? When we reached 03 half, it definitely started to turn into like stop runs behavior. Okay. There's a big old monster bid there at 12 that kind of pushed us back up. We'll see what they do if they come back to it. Okay, but do you really do you really think that having that on your volume profile really helps you see that compared to just seeing where those moves kind of happened with significant changes in cumulative delta? Because I'm definitely like, if I see the cumulative delta going one way and I know that there's information that should be pushing it the other way, and then we come across this, you know, I'm looking to hold it a little bit longer because I think that there's going to be people puking. Well, okay, so Uzi doesn't seem to be I'm going to say he's not sure how much it helps, but it is a clearer picture, so why not? Well, because then I have to put it on the screen and there's not enough room, that's why. I used to have those cumulative delta difference volume profile things on my charts. Those were fun. But I didn't think that they were worth anything. Okay, so here's where I would need to be degenerate again, but I'm looking at this and it's making me a little nervous now, so I am seeing these spreads kind of reverse too. Yeah, let's see if it lets me scratch it here. And then if I really still think that there could be some more uptrend, we can. What I'm seeing right there makes me hopeful. So there's an iceberg at 10.5. I'm not seeing a lot of contracts going to 11, so. There we go. Okay, so I was able to scratch it. Oh, no, it wasn't bad. It wasn't bad. Actually, it was bad. It was very degenerate, right? Let's not call it momentum. Can we not? I think that when we call a move like that momentum, that we're doing a disservice to beginning traders that don't really understand what momentum actually is. So let's just not use momentum as a descriptor for an intraday move. let's just say that we were in because we were getting very strong order flow, and the order flow has subsided. Yeah. And I kind of averaged in and out and did okay with that, and it eventually did move the wrong way, but I was still able to scratch it, so that's cool, I guess. But, you know, I was doing some pretty degenerate things to be able to do that. Treasury's rallying hard after Signature Bank's buyers NYCB plunges 40%. Regional Bank Index down 4%. The 10-year yield is down 10 basis points to 3.95%. What's that? See what I was... Now that's what I'm looking for, right? Oh, shit. It's starting there. Well, this was going on long before that. Man. That's like a 30-40% drop overnight. We want KRE, is it? S&P Regional Banking ETF, yes. Yes. So we have a new theory for why we're seeing the behavior that we are today. I think that this new theory doesn't completely line up with the timing, but could potentially explain why it didn't, why it started at around 9 o'clock, been going for the last hour. Could potentially explain it, because that would be, it's moving because that it started moving when the equities traders came in. And if that is the case, then it is a risk off move. Now that I'm out at 11.5, it's going to continue from here, huh? There's a massive long delta built up here. I mean, it's a fair argument to say that couldn't push a new high. The move might just be... Well, what I was trying to do was I could see the liquidity hole kind of starting to form, and I could see pretty clearly that there was like going to be some support there too. I thought that one worked pretty good. So I was trying to build a position up in here, thinking that there would be another leg. Right? The way that it started to behave, especially when the cumulative delta really started to reverse, made me rethink that, right? So that's what changed my mind. I'm not saying that what you said is not legit. It's just that's not why I did what I did. When I started to see this, I was like, okay, because it came back down to here, right? And then I was like, okay, this doesn't seem right. I'm concerned that it's going to come back down to here. Yeah, your share of arguments today. You did. Well, should note that the KRE is not moving at the moment. It was down big overnight. It was down big on the open, but it's going sideways now. Tell you what, it's going to be an awfully interesting Federal Reserve meeting today. Good luck without me, guys. Good luck. I actually, it feels a little bit relieving and freeing that I won't be messing with that today. Test is stressful though, man. A test is stressful. I think I'm really ready for it. So I was going through it last night. I was doing a test that was like all of the questions that I had gotten wrong before, and I was just killing it. And I was able to go through like every question and be like, okay, here's this. Actually, I was getting to the point where I felt like I could teach you how to tackle these problems really well. So once I'm starting to build that model in my mind, I think that really, not only does that really reinforce the information in your head and really get it in there permanent, but it also, I think, is a sign that you're really starting to understand it and that like it's been encoded into your brain, right? And I find it so interesting that it's like some of these questions I had such a hard time dealing with at the beginning. It wasn't like there was something that I learned between now and then that was different or anything like that. It was just the experience of doing it over and over again and your neural network adjusting to tackle those problems better. Of course, if I fail the test, I'll be awfully embarrassed, but I can always do it again, so that's not a problem. But I'm pretty confident I'm going to pass. Oh, okay, so now Zero Hedge has a story. The price of shares in New York Community Bank Corp. Yeah, let's put a link in here. The price of shares in New York Community Bank Corp, the regional bank that purchased deposits from Signature Bank last year, are crashing this morning below the SVB crisis lows after reporting a surprise loss for the fourth quarter and a cut to its dividend. As Bloomberg reports, the bank lowered its quarterly payout to shareholders to 5 cents. Analysts had predicted the dividend would remain at 17 cents. A worsening credit outlook contributed to the unexpected loss as the company boosted its loan loss provision more than expected. We recognize the importance and impact of the dividend reduction on all of our shareholders, and it was not made lightly. Chief Executive Officer Thomas Kagemi said in a statement Wednesday, while these necessary actions negatively impacted our fourth quarter results, we are confident they better align our larger organization with our new peers and provide a solid foundation going forward. The loss for the final 3 months of last year was $252 million. Why? I don't care about all this crap. The scale of these losses obviously shocked investors who believed the Fed, the Treasury, and everyone else that SEV was a unique event and the Fed had solved that problem. Management had previously said asset quality was strong, so something has clearly changed in their tone, John Arfstrom, an analyst at RBC Capital Markets, said in a note to clients. This was a material negative surprise. This should not come as a surprise to Zero Hedge readers, as we have been warning for months in the face of regional bank share optimism that all is very much not well beneath the surface of their balance sheets, as the imminent end to the Fed's bank bailout fund means regional balance sheets will have to find a different way. We have warned endlessly that without the bailout fund, regional banks are already in crisis and large bank cash needs a home, like picking up a small bank from the FDIC. And large bank cash needs a home, like picking up a small bank from the FDIC, question mark? RIP small banks. Yes. Which leaves all of us wondering, did the Ides of March come early? No wonder then, as we previously noted, that Logan, the only actual trader at the Fed, started to panic in early January and gave the market a green light to start pricing in the end of quantitative tightening. And when push comes to shove and we get a little market turmoil in the weeks that follow, as the market realizes that quantitative tightening is still taking place too fast and too many reserves are being drained relative to how much liquidity was being injected previously via reverse repo, the start of the next QE. What happens then? Well, we all know the end game, but here's a quick preview thanks to Blitz. This will add more liquidity to markets by virtue of the Fed returning to roll 100% of its holdings. They may choose to continue to run down mortgage-backed securities, a promise they always seem to make to themselves but break. The economy and inflation will inform them on whether to take that course. Too soon to say in the end. If we are sitting in summer with a growing economy and rising private credit demands that have helped to turn the curve positive, the Fed will recognize, to the extent that it does not already, that where they set the IOR is their most critical policy choice. More importantly, however, by then it will become all too clear that the Fed had not capitulated. Biden would have no chance of re-election, which incidentally is precisely why the Fed is going down this path, because the last thing the political Fed wants is a market crisis and or recession months ahead of the date when Trump might get re-elected. Something Bill Dudley is actively and shockingly lobbied the Fed against, and the trader Jerome is there to make sure all goes according to plan. And that's where we are now. All eyes on the SOFR spread for signals of stress in the plumbing. And in case you wondered why treasuries and gold are so aggressively bid, now you know. Flight to safety, anyone question mark? Yes. But that also leaves room for a hero trade here. Why not? Why the hell not? On sim, sure. All the way up to there. Obviously, I'm building my position at like the worst spot. I would like to be short from above 11.5, but that's the prices that I have. So here's my thinking. I think that the Federal Reserve could do some things today or announce some things today in their meeting and so forth that, you know, for instance, a replacement for the BTFP or a pause in rolling off the balance sheet. And if that is the case, then the flight to safety trade would be like destroyed here, right? Now, that would be kind of a complicated one because it would be like, well, that is kind of like dovish, but it's also kind of like not dovish. So you might be able to see like some of this risk premium come back out potentially, but then BTFP. So the BTFP program was a program that basically allowed regional banks to receive, like, park their treasury assets at the bank and get par value for them. So that, because what was happening was the value of their bonds had declined so much that their balance sheets were at risk. We'll do it from there. What kind of a joke is that? I don't know, man. If you're making, here's the difficulties. If you're making a joke for Seth and Seth doesn't like it, it wasn't a very good Seth joke, right? And the problem with that is that there's a large array of jokes that Seth's not going to get right away, right? You comedians have your work set out for you. You know, now that we've read that story and kind of understand what's driving that flow, the idea to me that the Treasury refunding would create that kind of trend seems kind of silly now. Because the only time I can think of where something like that kind of happened was when SVB happened. Like, I'm getting all of the flashbacks because I think I remember like doing almost a similar thing too, in terms of like trying to jump on it late and not necessarily catching it, and then it coming way back really hard. And I feel like I'm more versed in American slang than you. No. Okay. The program was called BTFP. That is very similar to BTFD, which is buy the effing dip, or BTFD, right? Some of us believe that BTFD, that the similarity to BTFD was intentional. So it's not funny. That's why it's not funny to me. So I remember when that announced that they're calling it the BTFP. What? What? Well, it was funny when it happened like a year ago, but okay, so let's go back to this story that we're reading on Zero Hedge. What are the asset implications if Trump wins? Trump-led Republican sweep could provide a boost to the U.S. dollar and to bond yields and drive some idiosyncratic shifts in international and domestic stocks. Looking at cross-asset performance from the 2016 and 2020 election dates to year-end, UBS Leo notes that dollar outperformed after Trump won in 2016 but fell following his loss in 2020. The U.S. Mexican peso was sensitive to the U.S. election result, and I think its sensitivity is likely to hold in this election cycle as Trump wants to impose a 10% universal tariff if he wins. The U.S. 10-year yield rose 63 basis points in the month after Trump's victory in 2016, given his tax policy, but it is less clear now as the former president has been less focused on tax cuts in recent speech. Also, the Biden administration would also seek an extension of some of the tax cuts if elected. In equities, China stocks dips after Trump's victory in 2016, but only slightly. Domestically, the equity markets are starting to price in a disturbance around the election, but it has been relatively stable for the last 2 weeks, and buying straddles may be a cheap hedge for some chaos. Additionally, Goldman Sachs has identified two baskets of stocks, the 2024 Republican policy outperformers versus underperformers baskets, which consist of industries that may benefit or face challenges if Republican policies are implemented. The Republican policy outperformance basket is composed of the following categories: financials that could benefit from any possible deregulation of the industry or from a rebound in capital markets activity; onshore producers and enablers of the onshoring trend; construction involved in the infrastructure of the country's border; energy, coal, and steel production in the U.S., law enforcement and domestic security; companies that have 100% of sales from small businesses. Hey, I would like to do that. That number 6 sounds great. The Republican policy underperformance basket is composed of technology, consumer, and industrial companies at risk to tariffs, companies perceived as IRA beneficiaries, including electric vehicles, clean energy, low emission fuels, efficient energy, battery storage, carbon credit beneficiaries, and green hydrogen, Companies at risk to wage pressure and defense. That's funny. Companies at risk to wage pressure. So they're saying that the chances for better wages are higher under Trump. Okay. Year to date, we have seen net buying in the Republican outperform basket underliers, while net selling Republican underperformers basket is going down. And Goldman's 2024 Republican policy pair basket has tracked Trump's victory odds since late 2022, notably tracking very tightly with the recent surge in Trump's odds. Interesting. In other words, the stock market is starting to discount a Trump victory, which they think also gets the outlier predicted odds above. So I would not pay too much attention to the predicted odds. I think it's those individual state polls, and the Pennsylvania poll is concerning. So let's go to Real Clear Politics really quickly here, and let's see if we can find the Pennsylvania general election matchups, battleground states, Pennsylvania. Okay. So we had, this was the poll that we're talking about, Susquehanna, which was conducted from January 15th to January 21st, and had 745. What does RV stand for? It's registered voters, not likely voters. Yes. And the margin of error was 3.7, and they had Biden up 8. But now a Bloomberg Morning Consult poll has Trump up 3 points, contradicting that result and being conducted over the same time period as well. Although I wonder why it took them so much longer to get their thing out. They had more registered voters. It's not likely voters, but that's okay. Okay, so if Trump wins Pennsylvania, then that substantially increases his chances of winning. So these are contradictory results. So I would say, like, maybe let's wait it out. But maybe things are starting to look better for Trump now. Okay, so I picked up a bunch of inventory there. Do you think it's going to be the Dems' next candidate if they lost this time? That's a good question, actually. It's a very, very good question. I mean, it wouldn't surprise me to see Bernie Sanders make another run at it. If Bernie, well, what happened last time around though? Bernie didn't run last time around, did he? Yeah, I don't think Bernie will run again. Kamala Harris will probably try, but I don't think she'll do very well. Newsom will probably try. Those are probably the biggest ones out there. Kamala Harris. A man who destroyed satanic shrine in Iowa Capitol charged with hate crime. You gotta be kidding me, right? Objecting to satanic displays in public is now hateful. That one is a little wild. I think you're gonna hear about that one a lot. That's probably gonna get people talking, man. That is wild. Wow, Cornell University has one administrator for every 2 undergrads. I'm going to hot air now to see if I can pick up anything else here, but because here we're about to get oil, right? So I pulled up Reddit, and this guy that's been arguing with me made another post. So I told him, like, if you want empirical evidence, just search for time series momentum, because that's that particular strategy. And his response was, your evidence that your strategy works equals just use Google. Lol, okay, cool. It's not my strategy. I'm not trading it right now. Maybe in the future I do. I'm kind of investigating if I can do it. It's not my strategy. It is a strategy that it's Jim Simmons' strategy, basically, is what we're talking about. Well, we don't know if it's Jim Simmons' strategy, but I think that one of the things that Jim Simmons did was momentum, right? It came back to my break-even point, and then it kind of bounced back up a little bit again. ZN seems to be seeing a lot of selling, but there's some absorption against it. Yeah, I think you're right. They're net selling now. We're almost back to where we were, but it's staying up there. Well, that is interesting. So I think that this may be a panic that blows over really quickly. I don't know. Like, that's a huge bet, right? I don't want to make a bet. Like, I don't want anybody to come back a week from now and be like, I thought you said this was going to blow over. That's not necessarily what I'm saying. But I do think that, like, over the course of the day, that what we've got here is probably, going to blow over. At least for today. Because from what I've seen on this, I do not necessarily see something that, like, directly leads to, like, another shoe dropping and things getting worse and so on and so forth. Like, the whole thing from my perspective is that, interest rates have gotten better, financial conditions are more loose. These small banks' balance sheets should be a lot better. They had a whole year of the BTFP. Like, I really don't see this just all of a sudden turning into, like, a massive financial crisis. But I guess I've seen crazier things, right? And when we do get a financial crisis, it does happen all at once. It also seems to hold on top of the standard deviation, if that makes sense. Oh, so are you saying, like, you have VWAP bands and it came up above one of the standard deviation bands and then it came back and it's just kind of hovering there. Well, but here's what happens is if you have a large meta order, it will tend to move things. And then when that large meta order is done, there tends to be a short-term mean reversion regime change. And that regime change tends to follow a 3/5 law. So what I'm looking to see happen is this. Drawing tools, Fibonacci time extensions. So we're going to say that this move started from here and ended at here. Okay. So at 250, and let's change this properties. I had the template set on my old one, but it's gone now. No, that's not what I want. Properties. There we go. Because it's the 3/5 law, right? 3/5, and then in the equation it goes 5/3, and that's 1. Wait, how do I get to it again? Or is it a 2/5 law? 2 1/2 now. A 2/5 law. I don't remember, but basically it ends up being 1.5. So sometime around 9:15 is when I expect the impact of this to like completely. So if nothing else happens, okay. What I'm saying now probably, I probably lost a lot of authority on you here because I'm stumbling, but stick with me here, okay? This tends to follow a square root law, okay? Volatility, y is a scalar, y times the volatility times the square root of the volume over the size of the meta order over the volume. And the size of the meta order in this case was like 50K, okay? 50K net change, okay? The decline follows a 3/5 law. So it's like y omega square root, or not square root. Q over V to the 3/5. Okay. And there's some math when you kind of put this into an equation to see like how long will it take to that all to come out, and basically it comes out to 1.5. So I expect it to kind of do this sort of a thing until here and kind of go dead. But if somebody comes in and takes an opposing meta order, it will probably go really hard back the other way. So that's why I'm kind of like, I can potentially build a position in here and then hope that something happens that pushes us back down. It's kind of a gambly trade, but probably won't be around to see it to fruition. I'll probably just have to scratch it before we end the stream. But that's kind of what I'm looking at. Because right now I see we are in like that mean reversion where it just, the activity kind of dies out and it settles. Well, that means that like the impact of this is permanent. That somebody's not trading against it, perhaps. I would say that most of the the change in cumulative delta has come back out and we're still up there. So oh, they actually was a little bit higher that time too. Although before it was 114.5. Okay. Well, how do I want to do this? I think I already have 5 contracts so if I don't want to go over 5 contracts, then I think the opportunity is already lost. I probably should have taken some more off back down in here so that if it came back up again, I could add more again. But maybe I'm going to be super wrong and there's going to be another shoe is going to drop and then this is just going to go, but gosh. That would be crazy. I am really having flashbacks. I remember last time this happened, like saying, I think this is going to come back down. And it did, but like way, way, way after we were done trading. Oh yeah, what about crude oil inventories? Crude is falling. The S&P 500 continues to sell as well. And the KRE? The KRE is doing a little bit better though. What's our stop on ZN? This is degenerate trading, man. Don't try and read into anything that I'm doing here, okay? This is on a sim account. I'm messing around. This is not a serious trade. I have a test today. So I'm not going to be around for the Federal Reserve meeting. There's lots of crazy stuff happening, so I'm not taking a serious trade, right? So where is the stop? Let's say $1,000. If it loses $1,000, then let's take it off. Yeah. Just to be clear. Yeah, it just goes back to the larger thing. Like if there's anything that you need to know before watching my live stream, it's that the only thing we care about is empirical evidence. I don't want you to try and copy my trades or, do something because you think that I've been successful in the past or something like that. I've actually had a lot of losses lately, okay? You come and you listen to this because you'll get empirical evidence and you'll learn more about the market, things that we can actually prove. right? Because if you can't actually prove it, then it's just noise, right? Will we ever be set free? I don't know. Do you think that there's going to be a stop run? That would be awesome. I think it could happen. I'm going to stay short just to increase the possibility of an awesome stop out happening. It's an Iron Maiden reference? Okay. I'm not familiar enough with the lyrics of any Iron Maiden songs to get that one. I'm not very good at listening to the lyrics of songs. It's so crazy to me that there are like entire genres of music and stuff where like what people like about the music is the stories that they tell and the words of the music and everything. Because in all of the music that I use, words is just kind of a way for you to set the flavor of the song. And like they're always very abstract lyrics that aren't actually supposed to be telling any kind of story. To just be expressing feelings and sound cool. Dude, it's right on the edge there, man. You know what, though? The ZN is a lot closer to its high than CF or ZB. ZB is actually kind of lagging here now. I'm seeing pretty extreme selling in ZB. That's probably because of the spread, though. Yeah, empirical evidence can be hard because each day has so many. Yeah, dude, there are just some fundamental issues with day trading. You know, I'm not saying that it can't be done or that it's impossible, but it's just fundamentally difficult. And yeah, if you're coming in and you have success on an individual trade, it's very difficult to know if it was because of your strategy and the decisions that you made or if it was just luck. And if you have a piece of information that you believe makes you informed and will predict the way that it's going to go, it's very difficult to know if that is the piece of information that's going to matter, because there could be all sorts of other information that you don't have that maybe ends up being more important. Like in this case, you know, I might have been able to come in here and say, you know, I think that because of the treasury issuance that we're getting, that there's going to be a little bit of uptrend in the treasury, so I can buy it here. And then I probably would have caught that entire bull run, right? But it would have been completely random because I didn't know that one of the bank stocks was down 40% overnight, and that when the stocks started trading that they would bid up the treasury super aggressively because of it. I didn't make the trade because of that at all. It was just luck, right? And how do you differentiate between the luck and the real? It's almost impossible, right? The only way that I really think that you can is having a large enough data sample, like 5 years. Wonder if we'll feel the single prints between 08, half, and 04. Yeah, that's kind of what I'm thinking about. Yeah. Like, if I can get this to go on 2 contracts, I maybe take one off at 04. Hope that then Powell pushes us down. You know, like that's the gamble trade, I think. Is you sell it from here, hope that you make a little bit of profit, and then so that you can hold it through Powell's presser and hope that he says something hawkish and push us down further. And then maybe if the treasuries get pushed down further, then maybe there'll be another panic bid because of something going on with the banks, and it'll go right back up. That's kind of how I see this sort of thing playing out this week. Here's an interesting thread on Reddit. This is r/ask Trump supporters. Do you have the impression that liberals genuinely seethe or get upset when you express your views? Yes, I do. I think that when I'm talking to a liberal and it becomes very clear to them that I am more informed and more intelligent than they are on the issues that they want to talk about, it really pisses them off. 100%. I'm kind of eyeing this, trying to see if I can glean anything about what the spread is doing here. Because I am kind of suspecting that what I'm seeing at the moment has more to do with spreads than anything else. How far did we move relative on this in the spread? Oh, wow. Look at that bottom data series. That's the spread. That's pretty wild. That's pretty wild, man. And by the way, where does that put us on a daily chart? Ooh. Well, I tell you what, the last swing high on the daily chart was 112.26. If Powell were to come out and to be dovish, I think we could get over that easily. And then who knows where we'll go from there. See, what I'm doing is like really stupid, right? But like, watch it work out because of how stupid it is. Yes, but don't you feel... No, not usually. I think that most intellectual conversations that I have with people about that kind of play out as like, oh, this guy is using a very strict logical and empirically based framework to try and make decisions and talk about things, and all I'm doing is just kind of feeling things out, right? And so once the conversation kind of comes to that point where it's like, here's how we should have a conversation, then they don't have anything left to say, because I've been sitting here spending my whole time trying to collect as much empirical evidence about the particular thing as I possibly can, and that's not what they're doing, right? Then they have nothing to talk. Then, right, as soon as you say, well, we need to have empirical evidence, or you're not saying anything, all of a sudden they don't have anything to say, right? And so I'm usually just left to be like, oh, I wish that other people were better prepared to talk about these sorts of things. Elon Musk bashes Delaware state after $55 billion stock options ruling, tweeting, never incorporate your company in the state of Delaware. Okay. Let's see here. Jim Iurio is recommending a story about why Americans do not see a strong economy. Starship will ultimately change how we access space, with entire space stations like Starlab launched in a single mission, says Elon Musk. Okay. That would be cool. Let's hear. What did Eric Wallerstein say about all this stuff? Of all the potential market movers today, regional bank woes weren't even close to making the bingo card. Yep. The BTFP is sunsetting on March 11th, but until then, the interest rate on new loans won't be lower than the interest rate on reserve balances. A couple of weeks ago, the BTFP was an arbitrage opportunity lull. But that's all he has about it. Oh, wait, lull, it won't what? It won't breach the new high? Oh, the space station stuff. Yeah, okay. Yeah, I don't know. I don't think that Elon Musk believes half of the things that he says. I think that he believes that if he says it, that it will make other people believe it and will cause it to be more likely to happen. But I don't think that he actually genuinely believes when he says it that it's likely to happen or any of that. Wow. UK police holding 2.6 billion in Bitcoin in money laundering trial. Wow. Yeah, this like we're gonna launch a whole space station in one mission thing is kind of like I mean, I guess when you think about the relative size and everything, it definitely increases their payload capacity, right? But you're not going to get like spacefaring people's Star Trek PS future unless and until as a yet undiscovered form of thrust is discovered. But I do think that you could see like larger and more elaborate space stations launched, and therefore much better research in space, for instance. I think that maybe a base on the moon could happen. So we could see shit, but it wouldn't be like Star Trek for sure. I really, the base on the moon, that's kind of like one of the key milestones that Elon Musk needs to hit, right? Because, well, and getting to Mars, of course. There has to be bases on the moon, and there has to be civilization on Mars in order for him to become the Mechanicus Supreme, or whatever they call it. You don't think in our lifetime we'll see a base on the moon or people on Mars? Oh, okay. That sounds like a good bet. I don't know if that's a bet I'm willing to take money on because I don't really know. I think that it could be possible that we see people on the moon in our lifetime. Yeah. Probably the only thing stopping it from happening is like the will, right? There's a lot of things that could be happening in our society and aren't because the will's not there. Well, if they fail to make this new high here, that could really put a dampener on this trend. Exactly. Yeah, but Elon Musk has the will, right? Oh, I'm sorry. I have it wrong. He needs to have a civilization on Mars so that he can become the fabricator general of the Adeptus Mechanicus. So he's gonna make it happen. Building bases on other planets? No, you don't think? I don't. I want to know why you think that that's so crazy. People don't realize how far we truly are from any of that fun tech. For example, we are only finally starting to figure out fusion energy. Okay. Fusion energy is a pretty insane technology to be like on the precipice of figuring out. You know that they've already gotten net energy out of a fission reaction, right? What is the point that they like the ignition, like the point at which the amount of energy that they got out of the reaction was more than the amount of energy that they put in? They've already done that like 3 times now. Just nuts, right? It cost trillions of dollars. I don't know if that's true. Well, okay, to build a base on Mars and to build a base on the moon are 2 totally different things, though, right? So building a base on Mars, like a permanent base on Mars, that would be crazy hard. Okay. Building a base on the moon, I think we could do it. But it would depend on what kind of a base, right? Like this sort of like installation where that has its own rocket launching pad and all of that sort of stuff. That probably takes, several decades. But something that is just like a place on the moon where researchers can live for weeks at a time. Yeah, I think it could happen in our lifetime. Absolutely. I don't think that is that huge of a leap from like having a space station. You just need to have a rocket that can get space station like stuff onto the moon. But it would be, it would be a relatively simple facility that would basically be like Mirror but on the moon, right? Or the International Space Station but on the moon. That I don't think is that crazy. Here it is, right there at those highs. Is it gonna do it? Oh, it's 9:03. Well, this one's kind of weird because like the 10-year is at its highs, but it's not across the board. So they're not really lining up. So I don't know if you're necessarily going to see like some breakout new high sort of a thing. So far, it kind of looks like the original trade that I was thinking about, which was, long from below 11.5 is working out okay. But I still kind of suspect that in the long term, that there might be some more selling. Yeah, it's a big ass sell position though. There's definitely areas definitely acting as resistance now at this point, right? Like they get up right to it and then nobody wants to do anything. So let's take this a little bit further. Elon Musk. It's time for me to get going, by the way. But can $210 billion get a base on the moon? I don't think so. It's probably more like $500 million to get a man on the moon, huh? Not a man on the moon, but like a space station. Wait, how much did it cost? The United States spent $25.8 billion on Project Apollo between 1960 and 1973. or approximately 257 billion when adjusted for inflation. Ah, there you go. So Elon Musk probably is rich enough to get a man on the moon or to get a man on Mars, but probably not rich enough to get a base. But maybe his son could. Maybe his son could. Maybe the plan isn't for it to be Elon, but for his son to be Fabricator General. Which would explain why he named a kid what he did. You heard this conspiracy theory that the crazy names that we see celebrities give their kids are actually fake. That's not actually the kid's name. Because there was this interview where somebody was asking about Elon's kid using the crazy name that they made up for him. And Elon was like, what? What are you talking about? And then all of a sudden was like, oh, I get. So the name is actually a front so that people don't know what their real name is and harass them. It seems like actually a pretty likely theory, doesn't it? I really don't want to leave you guys today because, you know, crazy stuff's happening. But I do feel good going into this test, and it will be very much freeing, I think. Freeing to pass it. I should do something. I should like have a celebration of some sort. What would I do? I'll have to think about that. Go snowboarding. Oh, that's a perfect night. Well, I can't do it this weekend though because my wife is working. Come up with some name like Chewie. Yeah, see, I'm not that smart. See, I shouldn't have used my real name. I should have said something like my name is actually Maximus or whatever crazy. You know, what would be the coolest traitor name I could come up with, you know? It would sound kind of traitory and cool, but actually like a real name. I have chat. Okay, fine. I actually, did I tell you I have like the full version of ChatGPT now? Okay, I have to switch it. Log out. Log in. Because my work, they just started using it and feeding their KB to it, so... But you have to do it within their thing to keep their data in there. So the solution was give everybody a personal account. Okay. So I can come into ChatGPT 4 and say, generate a list of names for a trader. Make the names sound really cool, but could still be like a normal name for a day trader. For a day trader. Let's see if ChatGPT gets it. Okay, so ChatGPT says that I should be named Chase Sterling. That's it. That's the new name. We're changing it. Chase Sterling. Do you think I could pull off a chase? I don't know if I could pull off a chase. Dude, they have some girl names in here that are pretty good too. Sierra Blaze, there you go. Ivy Stone. ChatGPT, oh, dude, it's ChatGPT-4, man. If you pay the monthly amount to get GPT-4, it is a substantial improvement over 3.5. So its list as Chase Sterling, Blake Maverick, Ivy Stone, Axel Knight, Sierra Blaze, Leo Phoenix, Jade Falcon, Ryder Crash, Skylar Fortune, and Zane Edge. Dude, Zane Edge. Holy. Oh. Why is that not my fucking name? Holy shit. What? I am having like a brain aneurysm now that my name is not Zane Edge. That is so cool. Is that a thing? Wait. Oh, there is a person that has the name Zane Edge on Instagram, but they're not at Zane Edge. There is oh jeez. There is a YouTube music channel named Zane Edge. Cause it's like Zane, like insane. It sounds like insane. Oh my gosh, it's so good. That is so ChatGPT. That is so insane. Why do you enjoy that one? Because it sounds like Insane Edge, but it's like a normal person's name. It would have been the perfect branding. I should just rebrand it and name myself Zane Edge. I'm very seriously considering it. I shouldn't have said anything about the name. Maybe you're gonna go out and try and steal it. The other ones were good too. Oh, ChatGPT, you're just too good. Skylar Fortune is pretty good too. Skylar is kind of a girl's name these days, though, isn't it? It's both a boy and a girl's name. Okay. Ryder Cash. Now, Jade Falcon, that one didn't really sound like a day trader to me, but... Riley... That's a good name. I gotcha. I'm not well versed in that world, but I know that name. Oh man. Zane Edge is way better than Stock Market Steve. It could be my alter ego too. Because see, Speculator Seth is not very good branding because Speculator is too hard to see. It's the most popular meme right now, is it? I don't know. Didn't she like stream on Twitch or something now? They're not really getting below 13. Oh, actually, they were at 12? Well, that's not too bad. I'm a little bit more hopeful that this is going to play out. But guys, I need to get going. I will see you tomorrow. I'll be here on chat too. But tomorrow I won't be here for the Federal Reserve meeting, but we'll have a lot to talk about tomorrow. So see you then. In the meantime, stay excellent, team.